This is probably last video of this section, and now we will end this theory part, and then in next section we will move toward our practical side. Okay, so this is just a basic and common legal and ethical considerations video. What are the legal considerations and compliance? Like market regulations, every market has its own set of rules and regulations designed to maintain fair and orderly trading. So if you are applying any EA, then must see your broker that if your broker has allowed that those type of EAs or not, because most of the prop firms does not allow any EAs, and they do not, because there are thousands of EAs available like martingale, grade, and all other stuffs. So if you are not familiar with those things, you will always understand in this course. And if your broker and if your prop firm is not allowing those EAs, then don't use that. And prohibited practices or market manipulation like automated strategies must avoid creating artificial market conditions or misleading price signals. This type of things can be done with HFT EAs. So what is HFT EA? HFT EAs is simply those type of EAs which is based on high frequency, and most of the time they will just blindly take multiple trades within milliseconds, and then they will exit by taking the benefit of market inefficiencies. And if you are taking those things, then those are considered as a manipulation, and that's why most of the brokers and pro firms don't allow those things. Insider trading means simply that those non-public confidential information for trading in illegal and whatever manually are doing bots. So ethical practices like always try to do fair market participation, and must be transparent. All your decisions and all the stuffs, all your strategies should be good enough to understand all the market conditions, and must take correct decisions, and those should be based on some risk to reward ratio and proper management. And navigating the regulatory landscape, like you should always stay informed related to regulation with your brokers, with the gold and all other regulations and market conditions which is happening worldwide. Like you can always follow Forex factory, and if you wanted to, because in my introduction video I already given you that we will try to build those type of boards which have little bit human intervention, because we are applying 1:2 or 1:3 risk to reward ratio. So blindly applying those things will cause you losses, but we will try to do a human intervention. Like if there is some news, we will stop that bot, and if there is one specific trend, then we will try to run those board in one specific direction. In this way we can build easily a lot of money. Okay, but and human intervention with those bots are very necessary. There is not any existed bot which can run 24 hours without any human intervention and they can easily make money. There is not any bot. We are making a special bot in this whole course which will run by its own, and you can also try to stop it, try to move it, and try to stop it. It totally dependent on you, and you will always try to do analysis. After completing your analysis, you can easily interfere your board, or you can easily tell your board that run on which specific side, and by doing this you can easily build a lot of profits. Okay, so hope this little video is well clear, and now you understood that which type of things you are going to learn in our next videos, and which type of things you are going to get, because we are doing it without coding, and this course can be done by any person. So that's why we will just do a lot of human interventions, and that's very necessary. Okay, we will try to implement 3 to 4 strategies, and then we will try to do these type of things. So guys, this is first video of this whole course, and in this video we are talking about what is algorithmic trading, how it is executed. So basically this course is for all type of people, whatever you are a beginner, intermediate, or a pro trader, or if you are an expert advisor trader. This course will cover all those things which are necessary for each type of people. So if you are a new and a beginner, and if you are not familiar with these things, then we will try to cover those things in first 1 to 3 sections, and then we will slowly move toward our most advanced sections. And if you are a beginner, then you can go from here, and if you are intermediate or expert trader, then you can directly move into third section or fourth section. Okay, now let's get started. I hope that you have chosen this course and you have taken a good decision. If you have not taken that decision, then I will definitely recommend it, because this course is definitely going to change your trading journey with algo trading. So what is automated execution? uh, it's like, instead of manual placing orders, if you are familiar with the trading, then all those trading were manual since, if we see all the history. But in now our advanced days, and this new technology developed this field very much, and now we can easily take trade based on predefined conditions. Okay, so there are multiple platforms available for this spot trading or grid type trading, but I already mentioned like risk to reward ratio in my course contents, that risk to reward ratio is very necessary, and there are multiple bots available with the grid system or martingale system, but those bots does not reliable. Why? Because of course those martingale strategies are going to blow at one specific time, so we must have to move toward a strict stop loss ratios, and 1:2 or 1:3 risk to reward ratio for successful in this algo trading. Okay, so if we talk about platforms, then there are multiple platforms available. Even if we talk about crypto related thing, then each exchange have its own boards systems, like grid boards, and then averaging boards, DCA boards, and all other stuff. So those things can be successful in the support trading, because there is not any chance of loss if you are doing in support. If you hold it, then definitely one day you will get money back. But when we talk about this forex trading or algo trading, these things must have SL, because we will not wait for the market again came to those levels, and it is based on highly leveraged system. So if you are not familiar with the leverage, then leverage is simply a buying $100 of trade with just $10. So with this leverage system, of course you needed to go with some strict risk to reward ratios. So first one is automatic execution. I hope you all know well understood that those computer or those bots will automatically take trade based on predefined conditions. What are predefined conditions? Predefined conditions, anything like any indicator, any strategy, and anything which, if those conditions trigger, then buy order or sell order will be executed. And then there is different approaches for placing stop losses. So if you wanted to place stop loss according to that strategy, you can do that. But if you wanted to place stop loss according to fixed terms, like only you can afford 30 pip SL, does not matter to a strategy, then you can also do those type of things. Keep in mind that we are not talking about theory, but this whole course is also included with the practical sides. So first of all we will learn theory, and then we will move toward the practical. This course is a combination of both. So first maybe first 2 or 3 sections we will only see theory there, but then after that we will move to our practical side, because practical in this whole course is very necessary. Speed and efficiency, of course, if you are at home, if you are working, then this bot can easily take trade based on predefined conditions, and it can easily bring a good profitability. Early beginnings, like automated trading, started as simple and rule-based system, like designed to handle repetitive tasks. Over time, as computing power increased, the system became more sophisticated, and nowadays it is developed for this forex markets, technological advancements, and global impact, and all those things. So uh, uh, hope you are now well understood that what is algo trading, and how it has came up to this much. It is just a simple program or simple thing which works any type of exchange and any type of software, in any type of software. And if you wanted to run an algo, then you needed to buy a VPS or RDP, because that RDP runs 24 hours. RDP simply means that a system or a computer which is present anywhere in the world, and that is running 24 hours, and it is not going to off, and you can easily access that by doing remote access from your systems. And after connecting that, you can easily put your supervisor in that, so your computer never gets off. because you cannot monitor all the time, and you can easily do trading in that. So here you will write RDP, a remote disk connection will be available to you, and then you will write computer name, its address, username, and all those things here, and you can easily get access to that. So why we cannot use our own computer? Because maybe we will go at work, maybe we needed to shut off this computer, maybe we needed to we are not having 100% electricity available all the time. So that's the reason RDP is recommended. So hope this whole section or this whole video is clear for the algorithmic trading. Now we will move toward our next video. In this video we are talking about advantages of trading bots. So if you are an old trader, or if you are an expert or intermediate trader and you are familiar with these things, then you can move into third or fourth section. These things are basically for those people who are new and who are beginner and who does not know about bot trading, and they are new in this field. So these two sections are for those type of peoples. And keep in mind that this whole course is with theory and both practical, so we will also do practical after doing theory. So what are the advantages of trading bots? First one is speed and efficiency. So bots execute orders in milliseconds and capturing opportunities that manual trading might miss, and you cannot stay on your screen for 24 hours, but bot can do that, and bot will easily take trades. And of course same scenario is written here, that 24/7 emotion free trading. That's the most important thing. Like most of the trader, what they do, they cannot control their emotions, and when they will see their little profits, they will think that that profit is going to miss out and they should book. But when they will see losing trade, or when they will see stop loss is going to hit, so they will cancel the stop loss, or they will move the stop loss thinking that market will go in their own direction. But those things does not happen, and these type of habits usually wash their accounts. So that's why bot came into existence, and bot does not care anything, bot does not feel, and that's why they just take strong decision, and they will clearly exit the market upon triggering some strong conditions. Consistency, like automated trading helps maintain consistency in applying strategies and leading to more disciplined trading practices. Backtesting capability, like you can simulate trading strategies on historical data to refine your approach without risking actual capital. But backtesting on all those EAs which are available in the market are not that much good. Why? Because in the history they will you will become millionaire backtesting after completing that, but when you will apply those things in the real market, then of course you are going to lose. So backtesting is not 100% reliable, and that's why if you wanted to work on any expert advisor, then run it on 2 to 3 months on demo trading, and must try to see their risk to reward ratios and its accuracy. Don't rely on backtesting results, because if you are not making your own board and if you are buying any board, then those boards may have a lot of vulnerabilities, and maybe they are history optimized, and maybe they are history readers. So of course you will face losses when you will blindly enter with any board. Disadvantages, like technical issues. Bots can suffer from glitches like connectivity problems and unexpected behavior during market volatility and all other stuffs. And then our optimization risk, like our fitting your strategy to historical data may result in poor performance in live markets. So whatever, if you make your own bots or if you are buying your bot, don't try to find those type of bots who are history optimized or over optimized, and must see their risk to reward ratios, and must understand their strategy, must understand their function. Keep in mind that there is not any bot which work on neural networks or which work on AI or something like that. They just use those AI tactics for marketing purposes. So that's why you should not be impressed by those things. Lack of human judgment, like bots cannot adapt to unprecedented market events or interpret news and sentiments the way human can. So bots can be very beneficial if you are applying it on your own analysis, and if you are applying your own strategies with those bots, so those can be a less human interactive, and those can take very good decisions. Security concerns. What are the security concerns? Like, if you does not manage carefully, bots may expose you to security risk, and including hacking and databases. What if you are moving with the MQL5, and if you're moving with the secure brokers like XNX and all other stuffs, so you guys are going to be stay very safe. So what is best way for starting your own bot? You will need to create an account, and my recommended exchange is XNX, and I will give you the link. Don't apply your bot on your predefined accounts or those accounts who are already made. My best recommendation is always try to create a new account for bot trading, and after creating your new account, you can transfer your funds in that, and after transferring those things, you can easily move with your expert advisor. But back testing or back testing on history and back testing on demo is very necessary. Now let's talk about key benefits for individual traders and how you can take benefit with this algo field. So after joining this course, you will know that which type of things you should avoid and which type of things you should go, because there is a lot of manipulation in this whole industry, and there is a lot of things happening in this industry which are not real, and most of the people charge thousands of dollars and they will believe you that their EA is good, but in reality those things does not exist. So that's why watching this course completely is very necessary. So first one is accessibility. Like, with user-friendly platform, even traders without coding background can build and deploy effective bots. So in this whole course, we are going to do this, that we are going to build bots without any code, and we will use and try to see those platforms. And then scalability, like automated systems allow you to manage multiple strategies or monitor market simultaneously. Improve risk management, like bots can enhance or enforce strict stop loss and all other stuffs. Automation free up your time, and you can easily go do your work and you can easily move with it. But determining or finding good EA that generate 5 to 10% in one specific month, only try to go with that, and don't try to use those type of boards which are highly optimized, and those are only good looking good in the history. Okay, so now our this section, little bit section is clear, and after and we will move to our next section. Then we will see that how you can do these things and how you can apply these things by practicals. In this video, we are seeing introduction to various asset classes, and which type of pairs works very well for expert advisors. So first one is stocks. So if you are not familiar with the stocks, then those stocks represents ownership in a company, and when you buy those stocks, you own a piece of that company, like NYSE and NASDAQ and all other stuffs. Then there comes Forex. What it is, Forex is simple currencies of different countries, and you can trade with the dollar, and their comparison is always taken with the USD. Why? Because USD is the most powerful thing, and if USD is getting more powerful, then euro will drop, and if euro is increasing, then USD will decrease, and most of the time US dollars are getting weaker and these GBP and euros are getting stronger. These operates usually 24 hours a week, and usually 2 days are on week, and work holidays like Saturday and Sunday, those 2 days are off, and 1 hour will be off, I think between 24 hours. Yeah, and the cryptocurrencies, they are evergreen and they always work, and they do not have any holiday. They work 24 hours, and each type of EAs can be done with the cryptocurrencies, and you can also put your EA with the stocks. And there are multiple approaches for cryptocurrencies. If you are using stock expert advisor, sports expert advisor, then that's perfect thing, because if you are holding for longer term, you can easily do that. But I will not recommend futures expert advisor, because there are chances of liquidation, and a lot of people get liquidated when they will use bots on the futures trade. Other asset classes like commodities, indices, ETFs. What are the commodities? Commodities are simple raw materials such as gold, oil, and agriculture products, and prices are driven by supply and demand dynamics and weather conditions. And then ETFs and bonds and all other stuff. So, why is this important for algorithmic trading? Because understanding these assets classes helps you to tailor your algorithmic strategies and for specific characteristics of each market. And maybe some expert advisors are working very well for one specific market and same bot is not working for another asset class. So you should also consider your target market, and then you can backtest your strategy first, and after backtesting your strategy you can easily apply on the live market. Okay, so hope these little bit introduction related to different assets and different markets are well clear. And we will try to build bots for Euro, USD, GBP, and gold. And if you wanted to take trades with the cryptocurrencies,